It's easy to assume that you can hire a third-party property management company and they will do everything they're supposed to do. Unfortunately, that's not really how it works. That's why asset managers are in place, and that's why we have an asset management fee, because we are actively working with a property management company. If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall DeCleared. Let's go, baby. All right, welcome back. It's so good to have you again today. I love that we're sitting here growing together and you are back for more. So I just had another awesome interview. I love that I'm doing these twice a week because I get to have this conversation with you directly about things that are happening right now. A lot of the interviews that we record come out a little bit later and after the fact. And so these give me an opportunity to speak to you in real time and talk to you right now. So the conversation I just had is with an industrial broker. It will come out in a little bit, but it was really interesting talking to him because he is in the market and transacting deals for his clients all the time on the sales and on the leasing side of things. So one thing that was really interesting about our conversation is that he has really focused on his niche. Like he knows industrial, and so he's focused on investing in industrial as well. And so we talk a bit about how he got started in his first deal that he bought. And so it's a really good conversation. Again, this is going to come out in a few episodes, so I'm not going to give it all away. But the point that I took away, the thing that I took away is, again, go out and get active, because he could have sat on the sidelines and he could have thought and listened to 1,000 podcasts without actually getting started. But he pulled the trigger. He bought one deal. He said he had some struggles with it. And there's no greater teacher than experience. And so he's got that asset now. It's outperforming, or it's performing better than expectation. So again, it's just really good to have a chat and have a conversation with somebody who is out active doing the work on the brokerage side of the business, converting that active income into passive investments. And again, we talked about how industrial is great for the fact that he's getting triple net leases, and it's a lower management item than some other types of investments. So again, we talked that, and then we also talked about syndications, and he had some really good points about why he invested in a syndication. Even though he is in the business, he knows real estate, he's actively looking for projects that he himself can execute on and be the owner of. He looked at syndications and he looked at funds to place some capital to diversify and to create less ongoing work for himself. And so as good practice, and as you need to start doing or should start doing, you can do whatever you want. But if you're listening to this, you should really start getting involved in the syndication world, start getting on people's lists so that you can get investment prospectus sent to you and you can get their offerings, because we talked about it today. And I'm always asking everybody, like, what kind of return profiles is that syndication kicking off? What's their waterfall structure look like? What's the investment thesis? Like all the questions that we go over. And I mean, this is on point because this episode that you're listening to is the third part in the series of 50 questions you should ask sponsors. So I am always asking those questions. I always want to know, and I want to see what's happening in the market and see what other people are seeing and get on new lists so that I can see investment opportunities as they come out. But again, back to this interview and specifically why it piqued my interest is he is a full-time real estate broker. He's brokering deals, working on the investment sales along with the lease up for his clients. And so he could easily say, look, I'm only going to invest in deals that I am looking at and that I am controlling. However, if I put some capital to work in a syndication with an operator who's tried and true, I can kind of set it and forget it. I write the check, I get the distributions as they come, I get to read the quarterly newsletter that comes out and tells us about the property. I can reach out and talk directly to the syndicator or the sponsor if I need to. But other than that, I really don't need to be full-time involved in that deal. It diversifies my investment portfolio, and it allows him to put some capital to work while he is otherwise unable to find or execute on a deal. And so I highly encourage you to continue to reach out to people, reach out to me. If you have questions, I'm happy to plug you into certain types of investments or strategies. I guess I'm not an investment advisor. I'm not selling investments. I'm just happy to point you in the right direction. Let's put it that way. so that you know what to Google, you know where to look, you know what to do, so you can get line of sight on some of these types of opportunities. And by all means, we are putting out opportunities now. So we are at the tail end of some of the legal on setting up a multifamily fund. And so I'm excited to have that conversation with you as soon as that is available. And then we have another one. It's a crowdfund deal that we're, again, at the tail end to get that thing launched. And so those are types of offerings that you can look at. You get those from me and you read through them. If it makes sense, if it resonates, if our investment thesis makes sense to you and you're excited about it, by all means, jump in with us and figure out how we're doing it so that you can learn. And that was the big thing that I got with this broker is, again, just like I'm able to be a fly on the wall in the syndication and take a look at what they're doing, how they operate, what their communication cadence is like, the types of documentation that they provide us. And then I can decide, do I like this or do I not like this in the sense of how they're operating? And then he told me in the next few years, he wants to actually go out and do his own, or he's looking at it. It's not like a high priority for him right now to be the lead sponsor or the general partner on a deal. But this will give him a further leg up should that ever come to pass. So again, highly recommend doing it. I'm excited again that you're here, that you're learning, that you're growing your knowledge base so that you can execute on some of these investments as well. So again, if you're getting value out of the show, jump on, rate and review. Helps me a ton, helps me get awesome guests. And that's really the name of the game. I want to bring on the highest quality guests that we possibly can so that we're all learning together and growing. So yeah, we're going to go ahead and jump into the third part of the series of questions you should ask syndicators. So again, we focus heavily on the multifamily space. So a lot of the references that I make are going to be towards multifamily, but I tweak these questions and they would make sense for other asset classes as well. So here we go. Let's jump in. All right. Welcome back to another episode of Agents Building Cash Flow. So glad to have you today. We're going to continue on our series where we're going over the questions you want to ask an operator or syndicator prior to investing in any syndication. Okay, so if you haven't heard the prior two episodes, be sure to go back and listen to those because we cover some of the basic stuff that you want to be asking. And then we're going to dig in a little bit more on some more detailed questions right now. Let's get it going. All right, so one big question you can ask if you're looking for tax savings and tax benefits, you are going to want to ask if there will be a cost segregation study being performed on the asset. So depending on what type of asset class it is, if it's multifamily, storage facilities, industrial, that sort of thing, a cost segregation can help accelerate the depreciation that a project can obtain in year one. And especially right now, there's a thing called bonus depreciation that is 100% bonus depreciation of what's able to be charged to a deal, or I guess the tax savings that could come from that deal. And so definitely ask your sponsor about this. Is there going to be a cost segregation performed on the asset? Because there are some tax benefits that you can receive as a limited partner investing in that deal. So good to know. Again, I'm not a CPA, but talk to your CPA about it. All right. So cost seg, remember that word, cost seg or cost segregation. Okay. So the next question is, when do you issue K1s to equity investors? So K1, it's a document for all the partners who invest in a deal. They will get a K1. It's an IRS form that shows you your gains and losses from the investment. And so you want to know when the sponsor is going to be issuing those. There's a deadline, but sometimes you try to get it out early. Sometimes you are right on point. So just ask that question and find out the answer. Next question. How do you plan to manage cash flow? Again, this could be a fairly straightforward question, but when a property is producing free cash flow, then you need to know how that cash flow is going to be spent. Is it going to be distributed to you, the partner? Is it going to be distributed to a preferred equity balance? Is it going to be held as reserves in case something happens at the property and you need capital reserves? So just ask how the cash flows will be handled and get to know all that will be in the documents that you're looking at and signing, but just ask it up front. All right, moving on. Here we go. We got, what third-party property manager are you hiring? If you're working with a sponsor that is vertically integrated, they may have in-house property management. So this question may not even apply. But if there is a third-party property manager, you want to know who they are. Just like anybody else on the team, you can look them up and figure out their experience level and what they bring to the table. So again, ask that and know who it is. And follow on to that is, have you ever worked with this property manager before? So it's a good question. You want to know how many assets that property manager has in the market as well. If it's their first asset in the market, that could be problematic. And I guess back to that question, if you've worked with them before, if the sponsors worked with them before, that is telling that they're being hired again, right? They're obviously managing the asset fairly well, filling it up, not keeping it vacant, turning the units, doing all the things that the property manager is there to do. And so if they're one-off, find out why it's the first time they're using them, find out if there were troubles with the prior property managers and what the sponsor is doing to mitigate those problems going forward. What lessons did they learn? So all good questions to ask. Let's see. Have you worked with a regional overseeing this property before? Okay, this is still in the same line with the property management company. The regional would be the regional manager of the property management company. They typically oversee a number of assets in a given market or maybe multiple markets. And so it's good to know what kind of working relationship the sponsor has with this property management company or somebody on the sponsor's team who has the relationship. So good question to ask. All right. What are your plans to hold your on-site manager and or third-party property management company accountable? So a lot of property management questions here. So it's easy to assume that you can hire a third-party property management company and they will do everything they're supposed to do, stay on top of the leasing, and everything's going to run smoothly. Unfortunately, that's not really how it works, and that's not how it operates. That's why asset managers are in place, and that's why we have an asset management fee, because we are actively working with a property management company to ensure that the business plan is being implemented in a timely manner, on budget, and we're making decisions in real time because we're looking at the cash flows, how the operations are actually going. So yeah, ask that question, know what the plans are to hold them accountable. So typically for us, we have like a KPI, which is key performance indicators that we give our property management companies. These are the metrics that we need you to hit in order for this thing to operate properly. And so that's just one way. We get reports on a weekly basis and even on a daily basis. We can look to see how many leads we're getting, how many people are leasing. And so we have access to all that data. So let's see. How is your accounting handled? Okay, so that's a good question. If there's an outsourced bookkeeper, if there's an in-house bookkeeper, if you are using a CPA that's handling all of it in-house, explain to your limited partners how that's being handled. We're proud to be sponsored by Ridgeline Investment Group. Ridgeline has a track record of transacting more than $53 million in assets throughout Texas. Ridgeline is currently looking to acquire 100 to 200 unit Class B multifamily communities between 5 and 20 million in San Antonio, Temple, Waco, Tyler, and other Texas secondary markets. To learn more about Ridgeline Investment Group, visit www.ridgelineig.com. That is a question on the accounting side. So follow on to that is what CPA firm are you working with? So if it's a local CPA, not nationwide, are you working with a sponsor that has national reach? And if so, you need to ask them how the CPA is handling the out-of-state assets that they may be acquiring and get to know their experience level. Okay, so those are a few questions about accounting. And then you obviously want to ask about the legal side as well. What law firm are you working with? So there's typically going to be several attorneys or lawyers that are involved in these transactions. The transactional attorney, who is handling all the documents and the paperwork for actually getting the deal closed, the actual purchase sale agreement, reviewing the title docs, making sure that everything's in line with the operating agreement for the entities that are being set up, and really just the actual transaction side. And then there's a syndication firm typically that will handle any of the SEC filings or the regulatory docs that are needed for the placement memorandum, the operating agreement for the limited partnership, and all that. So find out who those attorneys are, because it's good to know, again, their level of experience. Okay, here's a question about reporting. And this is a question that I've gotten a few times, like when and how often can I expect my financial reports? We have an investor portal that allows you to log in at any time. You can go in and see how the investment is performing. And so that's one way. But typically when we take over an asset, we are having weekly calls when we first acquire it, and weekly, like a webinar, we'll just record something, say, hey, this is how it's performing. This is what we're seeing. Very quick, very short. and we just send that out to all of our partners. Once we get through the transition and the turnover, then we will change that to monthly. And as far as the financials go, we are striving to do distributions on a monthly basis so that you're getting reporting on a monthly basis as well. So that's kind of a follow on. When do you do distributions? That's another question you should ask. So again, monthly, quarterly, or annually. Typically, the investors that we work with, we want to be paying out as often as possible, right? If it's a apartment complex that we are acquiring, then we want to be able to be making payments as soon as possible, or distributions for your investment as soon as possible. We just find that for ourselves, if I'm investing in an asset, I want monthly distributions. So I would assume that you would as well. So ask that question. Is it monthly? Is it quarterly? How are you going to pay out? As ACH, meaning direct to my account, or are you going to send me a check and I have to go to the bank and do all this? And so knowing that is good upfront. And then what's your communication policy with investors? Frequency and method. As I mentioned, we typically will do early on, weekly, and we focus on doing some sort of webinar where you can be invited to it so you can ask questions. But it is a short, hey, this is what we did. Here's our box score for the asset. Here's how many tenants applied. Here's how many actually moved in. Here's how many moved out. Boom, boom, boom. We'll go over that. Here's how the finances are working out. Here's how much we've spent on the budget so far, repaving the parking lot, all the different things that we're working on, but it's very short and concise. And then any questions you have. So 10-minute call, 15-minute call on a weekly basis. And then after that, we'll move into more of a monthly program where we're just sending out the distributions along with an update to the asset. Move away from the webinars necessarily. Here's a question you can ask, and not sure what type of response you'll get, but it will be telling if the sponsor can communicate with you any failures or trouble they've had previously. So one thing you can ask is, what will you do to communicate issues such as performances below expectations or delays in distributions, and report issuance? So if things aren't going great, it's not all sunshine and rainbows, is the sponsor going to relay that to you? You want to know that, right? And so one way you can do this in a roundabout way is simply saying, without even asking that, you can say, on a prior deal, tell me about some of the issues that you had and how did you handle it with your investors? And then that's a better way, I think, to phrase that question, just because going forward in the future, you don't know how they're going to respond. You need to know how they have responded in the past. And I guarantee you there have been problems on deals. And how do they handle it? What do they learn from it? Ask those questions. Okay, so those are some questions that you can think about when you are talking to sponsors on deals. And hopefully this has helped you get a little bit better insight on some of the things to expect with the syndication. And if you have any questions about these questions, these items, or you just want to chat with me, shoot me a comment and I'll be happy to have a further conversation with you about anything. Happy investing, and we'll catch up with you soon.
Surprisingly, most of the agents we speak with got into real estate hoping to gain passive income and become work optional. However, only 1 in 5 ever start investing. Most are simply too afraid to start. Once you get educated by listening to this show, you'll be able to overcome that fear and become the 1 in 5 who are finding financial freedom. Don't miss a single episode. If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. And we'll catch you on the next episode.